Hey, what's going on, everyone? So we're going to clear up some FUD here. So there's been talk that the reverse repo will no longer be accepting collateral overnight. That is not the case. So there's three types of repos, and we're going to read this together right here. There is a, right here, FICC facilitates bilateral repos, which is where the cash lender and the cash borrower directly exchange cash and securities. In the bilateral repo market, the parties specify the securities used as collateral. Therefore, a cash lender seeking to obtain a particular security would utilize the bilateral repo market. So there's that one. And there's also delivery versus, with the bilateral comes the delivery versus payment, or DVP service, which all securities delivery obligations are made against full payment. Now it says that FICC generally novates and guarantees settlement of a trade upon validation of the trade details, which results in legally binding and enforceable contract between FICC and the parties to the trade. FICC facilitates tri-party repos through its General Collateral Finance Repo Service, or the GCF Repo Service, which enables members to trade general collateral finance repos based on rate, term, and underlying product throughout the day on a blind basis. The Bank of New York Mellon operates the tri-party platform that facilitates trades conducted through the GCF Repo Service. So basically what they're doing here, and by the way, this is an approval for FICC 2021-003 of the proposed rule change to add the sponsored GC service and make other changes. So what they're going to be doing with the proposed change, let's see here, where did it go? So basically, they are FICC is proposing to expand the sponsored service to accommodate tri-party repo trading, which FICC believes would increase term repo activity within the sponsored service. FICC states that several market participants have indicated that they currently transact tri-party term repos outside of central clearing because they are not operationally equipped to perform the collateral management and other functions associated with the term DVP repos. A key difference between the bilateral and tri-party repo markets deals with the operational aspects of managing term repos. In the tri-party repo market, a clearing bank typically automatically selects securities from the cash borrower's account to serve as collateral that satisfies the credit and liquidity criteria agreed between the parties. The clearing bank then delivers securities against the simultaneous delivery of cash between the parties' accounts at the clearing bank. The clearing bank manages the regular reevaluation of collateral, variation margining, income payments on the collateral, and collateral substitutions. In the bilateral repo market, the parties themselves perform such collateral management and other administrative functions. So, for example, the Fed repo window, the Fed is the one providing central clearing, the Fed's the one taking in the cash, so therefore, the Fed is acting as a central counterparty. It says here that FICC would also be registering a new series of generic CUSIP numbers for the sponsored service that's proposed, which would be U.S. Treasury securities maturing in 10 years or less, U.S. Treasury securities maturing in 30 years or less, non-mortgage-backed U.S. agency securities, Federal National Mortgage Association, and Federal Home Loan Mortgage Corporation. I think this is a way to get some risk exposure out of these money market funds. I imagine is what this is going to be for. There's also Ginnie Mae, Government National Mortgage Association, fixed rate mortgage-backed securities, Ginnie Mae adjustable rate mortgage-backed securities, U.S. Treasury inflation protected securities, or TIPS, U.S. Treasury separate trading of registered interest and principal of securities, or STRIPS. Now it says the purpose of registering a new series of generic CUSIP numbers specific to the sponsored GC service is to avoid any operational processing errors that could otherwise result if a trade intended for the sponsored GC service was inadvertently processed as a GCF repo transaction or vice versa. So it would only be between a sponsored member and its sponsoring member. FICC would novate only the end legs of the sponsored GC trades. Consistent with current settlement process of such tri-party repos outside of central clearing, the start legs of sponsored GC trades would continue to settle on a trade-for-trade basis on the tri-party platform of a sponsored GC clearing agent bank. And then the super note down here says the FICC does not believe it would be efficient or appropriate to novate the start legs of sponsored GC trades, as that novation would unnecessarily complicate an already efficient process by requiring the parties to make significant operational and business changes to include FICC in the transaction chain. Since sponsored GC trades would only be between sponsored member and its sponsoring member, all start leg obligations would settle between a single set of counterparties, negating any efficiency or reduced settlement risk that FICC's novation would provide. FICC is also going to be directing each party to a sponsored GC trade to make any payment or delivery due to FICC in respect of a sponsored GC trade directly to the relevant pre-novation counterparty. So, yeah, interesting stuff here. So we got a new QSIP number, new types of securities being eligible. They're not getting away with the repo market. That's never going to happen. They have to utilize this market. So tri-party is what they conduct through the Fed reserve window anyway. So the fact that GCF is changing doesn't mean anything because they're adding the sponsored service. So that's basically it. The reason why they're doing this, of course, is to have FICC bear no liquidity risk, basically. And if a sponsored member defaults, FICC may offset its settlement obligations to the sponsoring member against the sponsoring member's obligations under the sponsoring member guarantee to perform on behalf of its defaulting sponsored member. So there you have it. That's basically it. I will talk to you all later on. Hopefully we have a good last 30 minutes here. Have a good one.